If you deferred your OAS, or you're thinking about it, there is a second calculation that almost never gets run. And most people don't find out it exists until after the money is already gone. The deferral premium is real. The math your advisor showed you is accurate, but there is another number on the same government form, and it moves in the opposite direction. In this video, I'm going to walk you through exactly what that number is, why it doesn't show up on most deferral worksheets, and what you can still do about it if you're already past 65. I've seen this play out more than once. By the end of this video, you'll know what to ask and when to ask it. Deferring your OAS past 65 erases your GIS every month you wait, and Service Canada will not pay back a single dollar of it. That's exactly what happened to Dorothy, costing her $39,955. Dorothy is 68 years old, sitting at her kitchen table in Edmonton, Alberta, with her OAS approval letter open in front of her. She kept her contract bookkeeping business running past 65. She followed her financial advisor's recommendation of 20 years, someone she trusted completely. She deferred her OAS to lock in a higher monthly payment, exactly as the math suggested. The Service Canada representative on the phone says, the 36 months of GIS you did not receive during your deferral period, that is $39,954.60, cannot be recovered. There is no form, no appeal, and no call that changes that. Dorothy sets the letter down. Her hands are cold. She feels blindsided. She asks the representative to repeat what they just said. Dorothy's advisor ran the numbers on the OAS increase. Nobody ran the numbers on the GIS. There is a rule inside the Canadian pension system, stated on the OAS application form itself, that suspends GIS entirely for every month OAS has not yet started. Not reduced, suspended. Whether your income drops the year after you defer, whether you become fully GIS-eligible at 67, whether you wait and hope the rule has an exception. It does not. The government will not pay a single retroactive dollar for the months you deferred, and the calculation that made deferral look like a guaranteed win never included this number at all. My name is Susan. I'm a CPA. I file final tax returns, and the seniors who call me after an OAS deferral recommendation have already lost the money before they know the rule exists. Now, a quick note. Everything I'm about to say here is general information. I recommend speaking to a tax professional or financial planner to understand your full picture. Here is what the deferral calculation was missing. Let me take you back to the moment this started for Dorothy, because the decision she made at 65 was not careless. It was the opposite. At 65, Dorothy was still taking on bookkeeping contracts in Edmonton. Her income that year was $28,000. That number matters because the GIS income threshold for a single senior in 2026 sits at approximately $21,624 per year. At $28,000, Dorothy was above it. She didn't qualify for GIS at 65. Her financial advisor looked at that number and said, "You don't need GIS right now. Your income is solid. Deferring OAS gives you 0.6% more per month. Defer to 68, lock in the 18% premium, and you will receive a higher OAS payment for the rest of your life." That calculation is accurate. The deferral premium is real. The advisor was not inventing a number. What the advisor didn't do was ask a second question. What happens to Dorothy's income if the contract work slows down? By the time Dorothy was 67, the bookkeeping contracts had dried up. Her income had dropped to $9,600 per year, well below the GIS threshold. At $9,600, Dorothy was fully GIS eligible. She could have been receiving up to $1,109.85 per month from the Guaranteed Income Supplement. She received zero, not a reduced amount, not a partial payment, zero. Because GIS requires active OAS receipt, and Dorothy had not yet started OAS. That is the rule. It is not a policy interpretation. It is not a gray area. It is printed on Service Canada Form ISP 3550, the application for the Old Age Security Pension and the Guaranteed Income Supplement. The form that Dorothy's advisor would have reviewed, or should have reviewed, before making the deferral recommendation. The government published it. It has always been there. GIS cannot begin until OAS begins. For every month you defer OAS, GIS is suspended entirely. There is no partial GIS for deferred months. There is no appeal mechanism that recovers GIS for the deferral period. There is no form, not ISP 3041, not any other form, that reaches back and pays out GIS for months when OAS wasn't active. Dorothy deferred 36 months. At $1,109.85 per month, that is $39,954.60 permanently gone. Now I want to pause here and address something directly, because I know what some of you are thinking. You may have heard that GIS has a retroactive window, that if you qualified and never applied, Service Canada can pay you back up to 11 months. That rule exists. It is in the OAS Act. But it applies to seniors who qualified for GIS and simply never filed. It does not apply to the deferral lockout. Those are two completely separate mechanisms. The 11-month retroactive window cannot reach back into months when OAS was not active, because GIS eligibility requires OAS receipt as a precondition. The eligibility was never established. There is nothing to backdate. Dorothy asked the Service Canada representative exactly that question. The answer was the same. No form, no appeal, no 11-month window. The 36 months are gone. Let me show you the math that was never run, because this is where the story gets sharper. Dorothy's 18% deferral premium on her base, OAS of $743.05 per month, adds $133.75 per month to her OAS payment. That is the gain the advisor calculated. It is a real gain. Dorothy will receive $133.75 more per month for the rest of her life than she would have received starting OAS at 65. To recover the $39,954.60 in GIS that was permanently lost, Dorothy needs to collect that extra $133.75 per month for 299 months. That is nearly 25 years. It requires Dorothy to live to approximately age 92.9. That calculation assumes the GIS loss is the only cost. For some of the people watching this, it isn't. Before we get to the part that most people never find out about, if you want plain language Canadian finance that actually applies to your situation, hit subscribe and turn on notifications so you don't miss it. Okay, let's keep going. Now, I want to spend a moment on the part that almost nobody talks about because it is the hidden piece that makes a bad situation considerably worse. Form ISP 3550, the application for the Old Age Security Pension and the Guaranteed Income Supplement, states the GIS requirement plainly. But the same application covers a second benefit, and almost no advisor mentions it when they recommend deferral. It is called the allowance. If Dorothy had a spouse or common law partner between the ages of 60 and 64, that partner is eligible for the allowance. But only if Dorothy is actively receiving both OAS and GIS simultaneously. Not one, both. While Dorothy's OAS was deferred, neither condition was met. Her partner's allowance was suspended for the same 36 months. The maximum allowance for 2026 is $1,409.72 per month. That means an eligible couple in the same deferral scenario was not losing $1,109.85 per month. They were losing $2,519.57 per month combined. Dorothy's GIS and her partner's allowance simultaneously for every month of the deferral period. 36 months at that combined rate is over $90,000. The advisor ran one calculation. The form ISP 3550 contains the information needed to run both. The government's own When to Start Your OAS guidance page on Canada.ca lists GIS eligibility as an explicit factor in the deferral decision. This wasn't hidden. It was published. The calculation that was missing wasn't missing because the data didn't exist. It was missing because nobody looked. Dorothy's advisor was not wrong about the OAS deferral premium. The 0.6% per month figure is accurate and published. The advisor ran one calculation and did not run the second. OAS deferral makes financial sense only when income stays above the GIS threshold through the full deferral period. For Dorothy, whose income dropped within 2 years of deferral, the calculation that was never run cost her $39,954.60. This is not a mistake Dorothy made. It is a gap in what she was told. Now let me tell you something that matters if you are watching this and you are currently deferring your OAS. Every additional month you defer is another $1,109.85 of GIS you cannot recover. If your income has already dropped below the GIS threshold, or if it's close, the mechanism is running against you right now. The correct action is not to wait, calculate the optimal restart date, or consult 3 different advisors. The correct action is immediate. If your income has dropped since you deferred and you believe you are now below the GIS threshold, you can call Service Canada at 1-800-277-9914 and start your OAS today. Once OAS is active, you apply for GIS using Form ISP 3520, the application for the Guaranteed Income Supplement. Going forward, GIS payments begin. The months you deferred are still gone. There is no mechanism that recovers them, but the loss stops the moment OAS begins. That is the decision Dorothy faced at 68. She could not recover the $39,954.60. She could stop the loss from continuing. Those are 2 different things, and understanding the difference is what the rest of this video is about. There is also a decision that some of you haven't yet made. If you are approaching 65 and deciding whether to defer, there is one question your advisor needs to answer before you sign anything, not how much will my OAS increase. That answer is easy. It's 0.6% per month, published on Canada.ca. The question is, what is my income projected to be through the full deferral period? And if it drops below the GIS threshold at any point, what does that cost me? If your income could realistically drop during a deferral window, through retirement, contract work slowing, a health change, a spouse's income stopping, the GIS lockout cost needs to be in the calculation. For every 12 months of deferral, you are putting $13,318.20 of potential GIS at risk. For the full 60-month deferral to age 70, the exposure is $66,591. Those numbers belong in the same spreadsheet as the OAS premium calculation. The advisor who recommended deferral to Dorothy was looking at a $28,000 income and a 0.6% monthly premium. Both of those numbers were correct. The income projection for age 67 was not in the model. The GIS lockout was not in the model. The ISP 3550 form was not in the model. The government's guidance was there the entire time. Before I close, let me tell you what happened to Dorothy. Dorothy started OAS at 68. Her 18% deferral premium adds $133.75 per month to her base OAS. She will receive that premium for life. She applied for GIS immediately using Form ISP 3520, and her GIS payments began the following month. She will not recover the $39,954.60 that was permanently lost during the 36-month deferral period. She has accepted that. What she has also done is stopped the loss entirely. And she knows, going forward, that both payments are now active and will be recalculated each year based on her income. She also contacted her Provincial Seniors Benefit Office in Alberta because there are provincial supplements that layer onto GIS receipt once OAS is active, and those going forward amounts belong in her monthly budget now. The 36 months are gone. The rest of Dorothy's retirement is not. This is not a mistake you made. It is a gap in what you were told. And now you know. So what can you actually do this week? There are 3 things, and the order matters. 1. If you are currently deferring OAS and your income has dropped below the GIS threshold, or you are not certain whether it has, call Service Canada at 1-800-277-9914 this week. Tell them you want to start OAS immediately. Every month you wait is another $1,109.85 of GIS that cannot be recovered. This call ends the loss. 2. Once OAS is active, apply for GIS using Form ISP 3520, the application for the Guaranteed Income Supplement. You can get this form at a Service Canada office or request it on the call. Going forward, GIS begins once the application is processed. Ask on that same call whether your situation qualifies for the current year income estimate option. If your income dropped significantly this year compared to last year, there is a provision that allows GIS to be calculated on your current year income rather than last year's tax return. 3. If you are approaching 65 and deciding whether to defer, ask your advisor one specific question before you decide. If my income drops below the GIS single senior threshold at any point during the deferral period, what does the GIS lockout cost me per month and in total? That question does not appear on most deferral recommendation worksheets. It should. If your advisor cannot answer it, ask them to pull up Form ISP 3550. The answer is on the form. Benefit amounts like OAS and GIS are updated by the government every few months. If a number looks different from what you're seeing on Canada.ca, drop a comment and I'll pin the update. The thread running through everything in this video is simple. OAS deferral is not always wrong, but it's only the right calculation when GIS eligibility is part of the model and for Dorothy. And for anyone whose income could drop during a deferral window, the second calculation was never run. I'll say it again. This video is general information, not advice for your situation. For that, you need someone looking at your actual numbers. But everything I've described today is accurate, and it matters. If this was useful, I'd be grateful if you shared it with a friend or family member who is thinking about deferring OAS, someone who could spare $39,954 or save $1,109.85 a month this year, because the people who most need to see it are the ones least likely to go.